most of the governments understood that the payment system has to be super efficient in terms of cost, accessibility, and those kind of things.
Hello, it's Ronitan Gaurav again, and it's a pleasure to host this special edition of our podcast. And we're doing this in collaboration with the Global Fintech Fest. This is the fourth edition of the Global Fintech Fest. It's taking place in September 2023. And on behalf of CFTE and our podcast, it's a privilege to be a special partner to the festival. Hello from Gaurav and myself to our special guest today, Mr. Asbe. Dilip, thank you so much for joining us.
Thanks, Ronit and Gaurav, for hosting me.
Dilip, now obviously everyone in India, most people in the international payments world will know who you are in NPCI, but just to scene set for the general audience listening to our pod, give us a few words to introduce NPCI, UPI, and yourself. Just help scene set for the international audience.
So NPCI has been started by RBI, and the RBI asked the IBA to execute it, and we have the NPCI as a public good institution now. It's a not-for-profit. What it means is it can make profits, but it has to redeploy back on the profits back into the innovation, creation of the infrastructure, etc. And when the NPCI was first, and when we look at the initial thought process was the hived off part, because RBI used to operate a payment system before NPCI came in, and there was a conflict in regulation and payment system operation. So the RBI decided that the NPCI will do that payment system operations job. So that was the kind of a highlight of how NPCI, and then obviously the IBA got the top 10 leading banks in the country, got them create a capital, even deploy resources in the initial period. And I believe that RBI also, what RBI did is the gave some of the operating activities which RBI was doing, and it kind of gave us an initial revenue, right? Initial 2-3 years, the substantial revenue came from the hived off activities from RBI, and actually that made NPCI fairly self-sufficient. And maybe that time we didn't understand the importance of that, but what happened is NPCI was self-sufficient, and it could actually put money on innovation. It could put money on getting the professional resources from the market, and it kind of helped us to stand on our own instead of going back and asking money for every activity of NPCI. So I think I would give a lot of credit for NPCI's success today to RBI. In fact, most of the credit today to RBI in that sense.
And NPCI, so what kind of timeline are we talking about when NPCI was set up? Which years? And when did the innovation agenda really kick off?
Yeah, so this was about 1st January 2010. We started our commercial operations, right? So entity was started before, but the commercial operations started on 1st January 2020. And NPCI has been there now last 13-14 years. And if you really ask me, the 2014 onwards, 2014, 2015 onwards, the real scale started. Whether it's a DBT platform, whether it's in terms of digital payments, whether it's a FASTag, the toll plaza FASTag, national toll collection, electronic toll collection system, whether it's UPI, whether it's the Bharat bill payments. So you can say that 2014, 2015 onwards, the real scaled operations started. While we had built up some of the systems, like we had started RuPay by then. We had started the national financial switch, which is the interoperable ATM network. We had also started the check clearing system, which we operate that on behalf of RBI. We had started some of the things, but I think the real scale started coming in from 2014-15 onwards.
And so it's like a new payment institute group. Originally, it sort of comes out of RBI. It's this public-private initiative, and then it really kind of gets into, I think, mainstream attention with UPI. I don't want to oversimplify it, but talk us through UPI and what you were like. One of the you and NPCI builder of this platform, which has become globally famous. So talk about like the building process of UPI. And when you were doing that, did you ever imagine just how big and kind of successful it would become? And why do you think it's become such a big thing?
So, I think there are 3 or 4 things. We were running IMPS by then, right? So we were aware that, what it takes to run the real-time payment systems, what it takes to build and operate the RTP rails. And we were also very clear that, what are the issues in IMPS we wanted to actually fix in UPI. So whole thought of UPI actually started with this whole creation of IMPS plus, and for the first 3-4 years, people actually believed that we are using the same IMPS platform to build over UPI, but the UPI, people didn't recognize that UPI is a completely different system from day zero in that sense. And I think one of the, I can say that 2-3, if you really ask me honestly whether we knew that UPI is going to be successful, I think we believed in it. We believed in UPI is going to be successful. I think the scale may vary from a person to person who could think about it. And I could think that there are 3-4 reasons why we felt that UPI could be really successful. One is, it forced the public-private partnership. I think public-private partnership, it forced the banks fintech partnership. So, we allowed the fintechs to come up as a third-party app provider, TPAPS, what we call, and they were superior in terms of providing the better customer experience, and we felt that this kind of creates a win-win because the money remains back within the banking system, and the channel experience can be provided by the fintech. So I think this became a solid kind of a killer formula as far as UPI is concerned. Second thing which kind of really helped UPI to scale up is the one of the first principle was customer experience. And while UPI may be hell complicated at the back end, we for a one financial transaction we do about 10 odd APIs with the ecosystem, right? For one single financial or non-financial transaction, but from a customer standpoint makes it very simple, right? With this whole emergence of smart, 2014-15, the scale up of smartphones, social media was started in a big way, and we thought this whole customer experience has to evolve dramatically. This was the second thing which I believe helped UPI significantly. And the third thing is, I believe the government and RBI backed it up like anything. Right now, I think the payment system like UPI, people may have the commercial institutes and everybody may have their own views, but I think, to be honest, I saw RBI calling up the banks meeting, government calling up the ecosystem meetings, and putting up their might to scale this up, right? Whether it's a system scalability, whether it's a innovation-led policies to allow new features. I think there was enough room for both government and the regulator to would have been a little bit of a risk averse. But I think they both of them took the risk, and I think those risk mitigated risk, I might say that, there was never an open risk in that sense, but those mitigated risk played off big way to support and scale up UPI. So I think 3 things. One is the banks fintech collaboration and having a diverse UPI ecosystem. Second is the whole first principle of customer experience and making it simpler journeys, simpler experience for person to person payments, person to merchant payment using the QR code. mandates, auto pay. We have done variety of innovation, and in all the places we looked at customer experience as well. And the third thing is the innovation-led policies by government and RBI kind of help UPI to succeed.
Can I ask a broader question about fintech innovation in the 2010s in India? And then UPI has been one of the key parts of, I guess you could call it, the broader, infrastructure changes. You had obviously digital identity established in this period. You have financial inclusion through more bank accounts. So whether it's Aadhaar, Jandhan, UPI, these are all sort of building blocks of this digital revolution in India in 2010s in financial services and payments. When you look at the fintech landscape, particularly in the second half of the 2010s, and obviously there's also demonetization, what do you think are the sort of key lessons or takeaways on how the public sector or the public-private partnership can work? And when you look out into this decade, the 2020s, sort of what excites you about the fintech landscape in India?
See, and as rightly pointed by you, when we started actually the thinking of UPI, we had Aadhaar already established, right? So that way we had a great example of a public good infrastructure before we actually started and at a citizen scale, right? They were doing 1 million enrollments on a daily basis. They were doing about 100 million odds on a daily basis. So we had a kind of a backing, and Mr. Nilekani being our honorary advisor, he got that whole experience of building Aadhaar using the complete open source tech stack, creating scale, the partnerships. I think his contribution, I must say, that was invaluable, right, in designing and operationalizing UPI. And actually nobody knows that, but the whole initial thinking and the work actually went on for 2.5 years before we actually launched UPI in 2016. So the whole conversation started in 2014 onwards, right? So that's the one highlight I would say. The second is, there is no doubt, Ronit, as you also mentioned this, that this whole Prime Minister's vision on Jam Trinity, right, UPI has been a big beneficiary of that, right? And we saw that the banks opening up the accounts in a record breaking manner, the evolution of smartphone and obviously the Aadhaar as a founding block. Right, I think that everybody had a bank account. Today also we have UPI used by 350 million Indians, and I think the common point is everybody has a smartphone, everybody has a bank account, and everybody has Aadhaar. So I'm saying clearly UPI leveraged the Jam Trinity as per vision of honorary Prime Minister in a big way. There is no doubt about that.
And when we look out in the 2020s, what's your vision or your expectations for the digital finance fintech landscape in India?
I think, in my assessment, fintech is a great story for India. I think, fintech, for a fintechs to be successful in any country, I would say there are 2 or 3 basic building blocks which are required. One is, I think the government and RBIs and the other financial regulators kind of willingness to grow fintech and make them successful. I think, I don't think now anybody has a doubt that the RBI, the government, the other financial regulators like SEBI, IRDA are super keen to grow fintech in the country. The second basic building block, I could say, that unpenetrated market, right? So today, even for the payments, we still have a 10x growth possible. And I did not speak about the credit, insurance and the investments, or which is like mutual funds, stock markets, and those kind of things. There is a huge underpenetrated market, almost like a ready for the fintechs. And the third part is, to take in a 1.4 billion population, if you try to create a physical infrastructure, it's going to be very, very complicated for the fintechs to drive it, right? And I think that's where the smartphone, the 5G, the lead, what India has taken on smartphones and 5G is going to be very, very important, so that, the fintechs are able to take uh, the service to the last mile in a very, very affordable and a very reasonable cost, right? So when you look at the customer acquisition cost, customer service cost, all these parameters which all the private equities keep talking about. I'm not a big fan of the jargons, but I think India might be the lowest amongst all. And in a way, the UPI kind of creates that as a base layer, right? Which is the customer is now digitally available to you. You are able to collect. You have the two biggest infrastructure. One is to onboard the customer, which you can use Aadhaar to kind of collect the money from the customer. You can use UPI. So I think these are the three. I believe the reason I believe that it's a great story for the fintech for next 10-20 years in India is because of these three reasons.
So a great story for the next 10, 20 years. You've got the onboarding through Aadhaar, digital identity. You've got obviously payment collection through UPI and others.
Yeah.
What was the third leg? Sorry, could you repeat that?
So I spoke about three things. One is the RBI and the government's innovation-led policies, which is actually trying to create a space for a fintech without creating a risk to the ecosystem. The second is the ready market. I spoke about the smartphone penetration and 5G, and in fact, you would have seen the Jio's new phone, which is available in about 1,000 rupees or something like that, and I'm sure that the apps can be run on that. And the third thing is the ready kind of population with the Aadhaar, with the UPI, the lowest cost structure which any fintech can get to acquire large scale customers on their services.
Right. Great. I want to delve more into what's next, what's coming in the future. And my partnering podcast crime, Gaurav, is going to drill into those areas. So go over to you, Gaurav, in Dubai.
Thank you so much, Dilip. I have to say it's a real pleasure to be having this conversation with you. You've had a very illustrious career. Not that you were looking to have an illustrious career; it's just happened that way from a person that's involved in a space where fintech wasn't exactly the most sexy, if I can say that word, right? As an industry, I've been doing it for 2 decades myself, and suddenly it's had a huge spotlight on it. And India specifically, with NPCI, even more so on an international stage, not just in India. So, two parts of the conversation I really want to explore with you is exactly what Ronit said. What's next for the organization on various levels? And not only in India, but perhaps internationally as well, is something I'm very keen to learn from you. So, starting with domestic, the scale and the size and the numbers we're talking about when your market that you're addressing and stitching together these pillars of enablement, right, which is what you do from Aadhaar, from the infrastructure, from the rails that you're providing, UPI. It's massive, it's colossal, it's a really huge network. So if we're looking at what you have today, what's coming down the pipe, and some of the things you did talk about: credit, insurance, we've talked about payments, you talked about rails. Can you give us some more insight on what you're working on there?
I think one thing I can say, there is never a dull moment in India and NPCI. And when I say that, when we have to grow the 10x market, I think there are many things which are on our platter, and hopefully we will be able to deliver as per the expectations of the government and the RBI. And obviously the technology is going to be big kind of a enabler for us to deliver that. And some of the things which keep running in our mind is, I'm saying, I don't know whether you heard the recent monetary policies, but RBI has announced the full offline payments on UPI. RBI has announced conversational payments. The SEBI has announced the secondary market investments using UPI. So I think there are many more innovations which are required. I would not say they are good to have. I think they are required to fulfill the 10x growth what we have. And when I say and obviously while NPCI can do just the central enablement, but the fintech and the banks role and their kind of willingness to adopt this new features and drive them to a scale will be more important in my assessment than what NPCI is going to do, because NPCI's work normally is like is amplified by the ecosystem, right? And I think their role would be very important. So I just believe that there are a lot of things to do, Gaurav, in my assessment, and we are trying to work as per the directions of the regulator and the government to drive innovation, to drive new things. The if you heard, the credit on UPI, the RuPay credit cards on UPI and or the digital credit on UPI is a big kind of journey for us today. The country has about 50 million Indians having the credit, unsecured credit, in that sense, and we are now looking at how do we drive this to the entire UPI base in the next 10 to 15 years, right, without creating a much risk to ecosystem. But it kind of adds up a lot of value to the customer, because we kind of create a completely tokenless form. There is no hardware, there is no physical distribution model. The customer is real time connected, which kind of enable banks to kind of look at a very low cost, high frequency credit, as low as starting from $10, $20 as well, right? That is the way I believe the country. Obviously, these are still got of the plans on the. These are this what you could call it as Excel sheets right now. The dream Excel sheets, but I assume that the ecosystem will utilize the NPCI platform to penetrate credit, penetrate the secondary market investments, the offline transactions, and many more services which we plan to offer.
So when you're looking at essentially providing these rails and setting this benchmark for adoption, right? I guess a lot of people look to you for guidance on elements that are very, very particularly focused on elements of credit insurance, which is data, for example, right? So I imagine NPCI, you must be working very closely on regulation or perhaps guidance on data to enable perhaps the best outcomes for these fintechs to adopt the rails. Is that something where you let the fintechs come to you with their experience in market knowledge and data, or you are perhaps setting more of a governance guidelines on that?
So we obviously are, while operating the rails, we are responsible for the governance. But I think the good news is, and this is what we have been discussing with the government for a long time now, and with RBI, that now the data protection bill has been passed and even notified by the president. So I think that becomes a kind of a bible for us in terms of how do we look at the customer privacy, how do we look at the consent architecture, how do we use the data for various activities what we have. I think now that while there were some RBI guidelines, there were some NPCI guidelines on data usage governance, but I think those were in kind of bits and pieces, I may say so, may not be comprehensive enough, but now it gets a legal backing. There is a proper law in place. So I think now the entire ecosystem, even the regulators, will have to align their guidelines which are compliant to the Data Protection Act in that sense. So I'm really happy, and I must congratulate the government and especially the IT ministry to headed by Mr. Ashwini Vaishnaw and Rajiv Chandrasekhar to kind of get this framework to us. Otherwise, it would have, while we are trying to drive the digital, and as you rightly said, Gaurav, digital means more data, and it throws up more privacy concerns in the ecosystem. But thankfully now, we have the structure in place now, and I think the next 12 to 18 months ecosystem will take to align to the law in that sense.
So what does adoption look like in your view and your experience at various category levels, whether it's the $10 lending or credit or all the way up to, say, meaningful business? Is something where
No,
adoption.
I think Gaurav, it's not even yet started actually.
Right.
This is only the beginning on that. We do about something like that $10 million spends on a daily basis on credit products of NPCI. So I think it's just a very, very initial start. We are still not even, I could say that we're not even started fully in that sense, because $10 million spend is kind of nothing, right? On a daily basis. Why? When you look at on an annualized basis, it looks like, but our aspirations to go 100x from where we stand now,
Got it.
next few
And
years.
I think the next thing I want to tap into is talking about technology a little bit more, which will then lead into looking at international collaborations or perhaps export of NPCI.
Yeah.
So one thing is fintech or technology companies seem to be a very good fit for you in trying to accelerate those goals: 10x, 100x, rapid growth, disruption, enablement at a faster scale, fresh, using these rails and capability sets, cheaper technology access in the hands of consumers and businesses alike. How much participation are you seeing from foreign disruptive fintechs looking to also make India a home for their technology and services? Is it something where you're seeing more and more people becoming part of the organizations? Are they interested, or perhaps they're ready-made, setting up infrastructure? How much of that participation do you see on the NPCI radar?
No, I think obviously the Google, WhatsApp, most of the MNCs, Walmart, their PhonePe, in fact, PhonePe was an Indian company which got acquired by Walmart, and we see Amazon is part of UPI, while there are local players like Paytm and the Cred and others. We see a large amount of the multinational players also participating back in the UPI. And I would say India ecosystem, right? Because in that sense, right? And I think it's a big market. It's a big market, 1.4 billion population. And I said that all the enabling conditions are already in place. So I think I see a great story, and the way I look at evolution of the technology last few years, right? If you look at the whole adoption of open source, right? Virtually, you don't need to pay a dime to create a large scale platform. You can host that stack on a cloud at a very pay-per-use kind of a model, right, without giving a commitment. So I feel this whole emergence of open source cloud technology and the AI, the distributed technologies, I think this is kind of giving a huge acceleration to start the startups. The younger generation is leveraging to the best, in my assessment. And I think that, and I'll come to the globalization in a while. I think the technology, as you rightly said, is a big kind of X factor for the growth of fintech. I couldn't believe this last few days, and I now I go back to what Ronit was asking me. I think if there was a fourth thing, I would actually add for the technology. The change of technology has been a big accelerator for the fintech adoption in India and the worldwide.
So we have a global audience who listens to this podcast and watches this. And they're at every level. You have people who are founders of digital banks, you have people who are startups in incubators and accelerators. What kind of message would you have for them when they are curious or looking to participate, perhaps, and say, hey, is India a market where we think we can compete in or perhaps offer our technology and services?
No, as I said before, I think 1.4 billion population. So there is no bigger market than India, which is open, transparent, and accessible to all the ecosystem. However, I would like to give a few inputs on the fintechs or the
Please.
founders that are looking at India. See, any developing market, India is extremely price sensitive. So obviously, if the founders are looking at the large margins, it's a high it's a low margin, high frequency, high velocity game, right? In that sense, right? And I think it has been proven time and again. The second part I would like to say that I think it's like a infrastructure deployment, right? The profitability doesn't start on a year one, year two. It takes little longer compared to any other business, I must say that. But obviously, when it starts in a big way. And the third part, I would like to say that, if you want to be in financial services, right, you need to be mentally ready to be regulated, heavily regulated. And you must have the robust risk management and a compliance framework inside the organization, right? These are the few inputs which I would like to give.
I appreciate that. And now I would like to move the conversation to export, international markets, right?
Globalization.
Right, absolutely. I mean, what has been accomplished has sort of by accident become a roadmap which other countries want to adopt. Every other country has studied what India has done, what NPCI has done, what RBI has done, and everyone wants to adopt it in the best way possible. And my understanding, to a very light, perhaps, or an initial framework, is there is a lot of conversation between your organizations and global governments in perhaps even lending expertise and frameworks in how to set this up in different countries and spaces. Can you give us more insights on what's happening there? Is that something that is a lot of people are inbound requests? So this is an active program under your guidance where you're looking to actively export? I'd love some light on that if you don't mind for our listeners.
Yeah. And, see, I think there were two kind of incidents triggered this whole thing. One is the COVID itself, right? COVID, you can't really create expensive payment systems and ensure that all the citizens are able to use it, citizens or merchants are able to use it, because they're at very different, and, obviously, the developing economies understood it harder than the developed economies in that sense. The second incident is this whole, the weaponization of the payment system during the Russia-Ukraine conflict. I think these are the two reasons. I think the most of the regulators worldwide and the government worldwide, which I think the RBI and the government of India understood that payment system is super important and super critical for the country's operations, and we must be having our own systems instead of relying on somebody else.
It's like having food security, right?
Yeah. So I think these two incidents have made them realize, and I see that, the many of the countries would like to implement or replicate the India story, right, which is the spearheaded by RBI and the government, in terms of not only create the RTP rail but create a digital payment system. I think the many countries are still trying to understand what is the difference between RTP rail and a digital payment system, right? Because a digital payment systems, RTP is one of the artifacts of the overall system. And obviously it has the merchant payments, it has mandates, it has the different use cases and those kind of things which comes in. But I think thanks to and what happened is NPCI also at the same time, based on RBI direction, started a NPCI International as a subsidiary. We have a full-fledged subsidiary. It has a full-fledged CEO and the entire almost like reaching out to a good employee base, and they have reached out to about 100 regulators with the support from RBI, with the support from the Indian missions. And look, I don't think India has a lot of commercial interest in doing this, but let me tell you what is that government RBI are thinking. One is India has built up with a lot of hard work these payment systems. If there are markets globally who would want to use the stack, want to use the expertise, it is available to them, right? This is the first story what we are looking at. And we are just doing it on a basically not on a cost plus model, not on a really profiteering model in that sense. And if you really ask me, the interest of India is actually into one thing, that India would like to be the way India is self-sufficient on the domestic payments. I think India wants to be self-sufficient in next 15 years, 20 years on the cross-border payments. I think that is what is the India's interest, what you may call upon. And and RBI has taken the lead to collaborate with the Singapore market, UAE market, and you would see many more examples wherein both the use cases, where the diaspora wanting to send money to the Indian accounts, right? Indian remittance increased $100 billion, and you could look at it even a 1%, 2% kind of efficiency on that can build in the huge value to our citizens outside. And the second thing is, our Indian travelers, right? So we are trying to see that at least the neighboring markets wherein the Indians are visiting most, at least can have a India-like payment experience using the UPI QR code or the RuPay card, something like that. So I think this is what is our value proposition and the go-to-market strategy. So obviously it's the country's choice, Gaurav. I don't think we are saying this is the way, and the countries are at different stages of thinking in that sense. And the only point which I would make is, if they look at if they leverage the India experience, they can save a lot of hard work, is what I can see. They can save a lot of hard work.
That's a very, very interesting and insightful mandate, and vision. So thank you for sharing that with us. I think, to put it crudely, like you said, it's every country has its own choice. And another way of looking at it perhaps is to say, if it ain't broke, don't fix it, right? Is the
Yeah,
old
of course.
thing, right? So,
Of course.
but you did mention two countries, right? You mentioned UAE and you mentioned Singapore. Can you tell us about perhaps some of those initiatives that you are looking at and what they actually translate to? Because there's been a very strong relationship with the UAE, where I'm based and born, and my family started fintech payment technology 4 decades ago, right? And there's always a very close relationship, not only in terms of business, but in financial remittances, transactions, business in a big way.
Yeah.
Can you tell us more about what's happening there? Can you give us any insights?
No, and thanks for asking that, because I think UAE is like a second home for Indians. I think the any Indian want to visit abroad, I think the UAE is Dubai is the first destination for him or her. So I think and let me just take you back. I think the India UAE and India Singapore, both corridors have few things in common. One is both the countries have the great government level relationships. Our prime minister, the ruler of UAE, extremely great and thick relationships. Similarly with our prime minister and the Singapore prime minister, again, great relationship. RBI and the Central Bank of UAE and RBI and the Monetary Authority of Singapore, again, very, very thick relationships. And as you rightly said, even at the citizen level, right, the great relationships between India, Singapore, and India, UAE, right? I think these are the two kind of, I would say that, the most preferred kind of destinations, or even to place for the diaspora standpoint, or even from the travel standpoint. So the RBI, government, and us have chosen these two markets to facilitate two things. One is when the Indians are traveling there, they are able to scan the QR and make a transaction using any UPI app or the RuPay card. And the second is, if the diaspora are staying there, can they do real-time remittance by connecting to the RTP rails of that country and RTP rails of India, which is UPI. So if you look at it, the Singapore has a Pay Now, which is the UPI kind of equivalent system there. And today, in 15 seconds, you can transfer the money between the India and Singapore bank accounts, a real-time basis, with all the validation compliance which both side regulators desiring for. And I think UAE is implementing the IPP, Instant Payment Platform, which would be operational this year. So I think we are now, the RBI has signed up the MOU with the Central Bank UAE to facilitate the connectivity between the IPP and UPI. So hopefully sometime during next year, you would also, what you are able to do between the Singapore bank account and the Indian bank account, you would be able to do this with the UAE as well, right? So I think these are the two going to be the landmark corridors for the real-time fund movement between two countries, in my assessment. And the world is going to replicate the same story for the preferred corridors.
I think it's hyper interesting. I think everyone is going to be watching this very closely. I think it does so many things. It sets up international relationships between two countries, two governments and organizations to talk to each other. It opens up many more business opportunities for fintechs and businesses and consumer benefits alike. And I think at the same time, it's going to be a replicated model, like you say, between other countries and which have close ties and relationships between their diasporas, right? Different aspects of business and consumer. But also, what I would like to understand is this is a direct relationship for products and services, essentially enablement. When we were talking earlier about NPCI perhaps giving guidance or frameworks, which other countries are perhaps looking to you for that network or that framework understanding to say, hey, we want to set up our own version in our own countries? Can you talk about that also a little bit? Where are we seeing? Is it Europe based? Is it Australia based? Is it North America? Where is the
So I think,
strongest interest?
yeah, I think the global south, we are in touch with many countries in global south, Gaurav. I think the developing countries are well taken care of in that sense, right? Because US has a FedNow now, Australia also has has an instant platform. So I think the global south, right, where there are challenges very similar to India, has been fairly keen on this kind of a low cost, high frequency, high velocity payment system built up, right? But obviously, being said that, it's their choice, and they might just do variations. They might do, but I think Gaurav, I think our intent is to support the country so that our interest is, many countries have this real time payments rails, which are low cost, which are mobile based, which are high velocity, right? Because once this happens in a next 30 to 50 years time, the chances to create an interconnected global financial internet is very high, right? And that's what we are looking at. And that our vision of having a global financial internet, right, which is well connected, low cost, kind of drive the trade business in a big way, right? It's a world as a single platform, is that it might take next 20 years, 30 years, Gaurav, but I think it's okay. I think the having the efficient global efficient domestic payment system is a starting point, I must say, that to fulfill the vision of interconnected financial world.
I think when we look at scaling any products and services enabled by disruption or technology, accountability also becomes a huge part of the equation. It's silent in the background. We talk about disputed transactions, or we talk about data security or consumer protection, whether it's fraudulent or those elements as well, right? It's something we don't really give much recognition to. Everyone's looking at revenue, everyone's looking at increasing businesses. Can you give us, I know it might not be the most interesting thing perhaps, but accountability is the cornerstone for adoption, for continuous adoption trust. Can you tell us more about how you build that safety and security and how you address that? Because that needs to compound at the growth. So if you're going to grow 10x market from a consumer and business point of view, where's the 10x capability to support that? That would be an interesting insight to look at from your side.
No, Gaurav, again, a great question. I didn't expect that. I thought this is, I think it's a great question. And I would love to spend some more time on this, because this is core to our heart, right? Because the trust in the payment system is as good as the common citizens' trust on that payment system, period, right? And today RBI is actually behind our blood to ensure that the consumer protection, grievance redressal, and everything which is correlating to the consumer trust. And today RBI has issued a guideline that most of the payment system now are in the process of implementing the online dispute resolution, right? So it's a resolution. I repeat, India is going to be the first country which has an online dispute resolution, right? And
wow.
Today on any app on UPI, you can actually initiate the ODR, right? And if the transaction is stuck in the debit leg, credit leg, anywhere, right, from a technology standpoint, incomplete transaction, unfinished transaction, the UPI system has the capability now, based on the RBI's ODR direction, to resolve any dispute online, real time, right?
And that's with an international transaction as well. It could be a Visa.
So look, I'm just saying that again, the UPI as a ecosystem, we have a full end-to-end control on that. On the international transaction, it all depends on the other country's capability to resolve, right? Because see, this resolve is super important. The resolve is the system has a capability to go back to the source of truth, right? Which is the core banking system. For an example, it can actually go back and check whether the credit or debit has happened. And if not, then reverse it real time, right? Basis the ODR transaction. So ODR is nothing but a financial transaction in that sense, right? And it's a separate.
We have to take a pause for a second here, because
Yeah.
I think I'd like to break it down for our listeners to just understand the significance of what we've just discussed.
Yeah.
And why it's extremely important. When we're talking about growth and distribution of technology services at a consumer level, at a payments level, dispute resolution is actually one of the top two reasons why financial products and services are not distributed to the lower end of the segment to grow, SME and below. Sorry, this is a huge problem globally, because people do not have access to financial technology and services as products and consumers, because dispute resolutions take too long and actually break businesses on scale. If you've managed to actually do this, this is a huge groundbreaking problem we've solved, which can actually increase that huge 5 to 10%, which is permanently never served. Doesn't matter.
Yeah.
Doesn't matter from technology. It doesn't matter from distribution or capability. They are categorically never provided with this. And if you crack through that, that unserved, permanently unserved market opens up suddenly and distributes so many jobs, opportunities, technology in the market. That's groundbreaking. When does that go live?
No, it is operational. And let me take it to the next level, Gaurav. Now, see, what happens is, there are two mechanisms for the ODR as per the RBI direction. One is the customer can raise it anytime after the transaction, right? So customer can raise it and get it resolved. The second is if the customer doesn't resolve all the technically unfinished transaction, incomplete transactions, the system recognizes that this transaction is unfinished. So raise an ODR on behalf of customer. So every 1 hour, 2 hours, even if the customer has not raised the ODR, or we call it as we have branded it like a UPI help. The system is intelligent enough to identify and do the resolution on its own. So today, 45% of technical disputes gets resolved by ODR on its own.
That's crazy. So,
and our objective is to go to 90%. 90% plus technical disputes on the system should resolve on its own without even customer doing anything.
Unbelievable. So you're essentially also removing the entire requirement for a pre-auth and a post-auth transaction requirement at all. There's no need to have a pre-auth at all anymore.
So, I think the UPI is a single message system, because that's what I think the issue with pre-auth and post-auth, I think it is required in the legacy systems because of the finality of the settlement requirement or the guarantee of the payment. UPI provides that inbuilt. The second point I would like to highlight is RBI is also really bothered about the settlements, right? The financial settlement between the institutions. Today, all 365 days, technically every 2 hours merchant can be credited, right? Every 2 hours. So merchant gives the money and every 2 hours they can get their money back. So, that's the level of efficiency UPI drives on. We do about eight settlements on a daily, irrespective of the holiday, irrespective of the what you call public holiday, private holidays, whatever, all put together. So we settle every day for 365 days. And, every 2 hours merchant can get paid. Every 2 hours.
If this gets adopted globally by governments, just this enablement of dispute resolution, this ODR piece globally, the amount of digitization of transactions, job creations, flow, credit on the back of this for the next 10 years is massive. Because while everyone's competing for the current space, this is a completely untouched problem that needs to be solved. So I could go on this and sort of geek out on it a lot. I mean, it's very interesting for me, but I think at this point we're coming to a close. So Dilip, from my side, thank you so much for those insights. I'm sure there's lots more we could talk about. Look forward to having you back on us again. I'm going to hand back to my partner, Ronit. Thank you so much.
Dilip, it's been a pleasure to host you. I think Gaurav could have gone on for another hour. I've got loads more questions. I'd love to chat to you about fintech in India and payments, but we're out of time. So hopefully maybe in the future we can have you back as a guest. And
No. Thank you so much. And I hope to see you guys at the GFF in India. And I believe that it's going to be the biggest show what has been hosted by NPCI and with the collaboration with the RBI, government, and the other institutions.
I'm sure GFF will be awesome again this year, the 4th edition, and we look forward to future editions as well. Thank you so much to the audience.
Thank you. Take care.
Bye.
Bye.
Thank you.